Okay, so there's heaps going on at the moment, and today I'm sitting with Andrew Bailey. Now, Andrew Bailey is the small business spokesperson for National, and also is revenue spokesperson, commerce, manufacturing, state-owned enterprises, and associate finance. So you've got a lot on your plate and a lot of understanding of a wide range of important topics. So, Andrew, first of all, thank you for joining me today to talk about what's going on.
Thanks, Gemma. Lovely to be with you.
Yeah. So I thought we'd get started. At the moment, as I mentioned, there's heaps going on. So what do you think are the key issues that we are facing?
Well, I think in the small business context, the biggest issue is cash flow. So my electorate, I'm the MP for Hanua, although that's about to change to Port Waikato, but it straddles the Pukekohe, Bombay, down to Tuakau and Pocono area at the moment, and that's where we had the border issues during the recent lockdown. But I spent the earlier part of last week walking around probably about 400 businesses, and the overwhelming thing, there's some businesses doing pretty well, like a mechanical shop repairing cars, that type of thing, going fine. Clients still bringing in their cars, doing all that sort of stuff. A lot of builders I'm talking to are still pretty busy, or whether that remains through into 2021 is yet to be seen. But from a retail sector perspective, and a lot of other sort of businesses, they are just in such a fragile state. So one of the things about the 8-week lockdown is most of them use their cash flow to cover the 50% of their wages they didn't receive. And so it was good the government gave the 550, but in many cases they had to top that up. The other thing, they had no compensation or assistance with their rent. And the third thing, of course, is overheads. And those two factors particularly have meant that by the time they came out of the first lockdown, they were fragile. Then we've just had the second lockdown in Auckland, and of course, that's just had another impact on top of that, which is really unwelcome.
That's actually a pretty nice segue to my next question was, we've been through the 2 lockdowns, we're seeing what's happening overseas. What have we learned so far that we could actually take next time there's an outbreak that would make us a bit smarter?
Hey, well, let's hope we don't have another outbreak, and that means we're going to have a proper border control, because it can only come in through the border. So that's the central lesson. Do not allow people in until they've been tested properly, because that's the biggest thing we can do. But from a business perspective, I suspect if we have another lockdown, we're actually going to have a lot of people who will simply not comply. And I'm not trying to be difficult or inflammatory. Just the state that businesses are in, they are so vulnerable that they cannot get to the stage where they just go into another lockdown. So I think that's a really worrying thing for New Zealand from a business perspective. But I think in a much wider context, New Zealand actually now is pretty fragile as a country, because we went into this COVID lockdown only back in March. It's not that long ago. We had net debt of just on 60 billion. By the time we have the election, we'll be over 100 billion. So we've roughly doubled it. The interest cost on that debt for this year, this financial year, will be about 3.5 billion. That is the same cost it costs to run the New Zealand Police Force. And we haven't paid off a skerrick of debt yet. And over the next 4 years, Gemma, the debt's going to double again from 100 to 200 billion. We are in real trouble. So the biggest thing is to support these businesses right now so that they do continue, but more importantly, over time, start to re-employ people, because that's our big issue now.
Yeah, absolutely. Keeping those unemployment figures somewhere sensible.
Well, as you know, we've had 80,000 go on the job seeker benefit since March. So, and we're now at 200,000. And I don't know whether you saw the survey results that came out, I think yesterday morning, saying that of the people who've been interviewed who've currently got a job, they basically think there's going to be another couple of 100,000, 225,000 who think they're going to lose their jobs. So we could easily end up with over 400,000 unemployed. That is, and that for a country is just devastating for everyone.
Yeah, and whether that eventuates or not, it's the confidence that we have in
Yeah,
spending. If
yeah,
we're faced with the potential of losing our jobs, we're going to pinch our pennies, and therefore those retail and hospitality industries that are already feeling the pain are the ones that are going to be bearing the brunt of it, because we're not buying those luxury items, we're not spending that little bit of extra cash because we don't have that confidence.
yeah, I agree with you totally.
Yeah. So what's your business owners be thinking about at this time?
Sorry, what was that, Gemma?
What should business owners be thinking about at this time?
Well, when I was walking around, I've owned a lot of businesses personally, so I know what it's like to be in a tough situation. What I'm saying to them, particularly those that are already in a difficult situation, for retailers, people like that, I'm suggesting that they destock somewhat and put the cash in the bank, because my personal view, this situation will go on for the next 3 to 4 years. And the reason I say that is twofold. One is because everyone's hopeful that the Oxford virus, which seems to be the most advanced, is all going to happen very quickly. What people don't realise, to get approval for a new vaccine normally takes years to get through FDA, which is the American equivalent of the EU drug agency. So that needs to go through all the human testing. Then it needs to be manufactured, and we've seen President Trump already put in a preferential order for the United States. It needs to be sent to 195 countries, and then New Zealanders need to be inoculated with it. All that takes ages, that takes years. And on top of that, what's happened, we were lucky as a government when we went into this lockdown, because our debt to GDP was, I talked about 60 billion, but in GDP percentage terms, it was only 20%. If you went to Europe or the UK, they started at 60%, America started at 100%, and Japan started at 265%. And of course, they've all done what we've done, which is spend money supporting their economies, their businesses, all that sort of stuff. And most of those countries now, and we've seen it particularly in places like England, who are literally, the governments are looking at their balance sheet going, what has happened? We've got so much debt now, we're going broke. And of course, what they're now doing is actively encouraging people to get workers back into businesses, encourage your businesses to start up again. And what that means, of course, is that you have people in close contact. And if you go back and look at all the big SARS, the influenza epidemic in 1918, they go through cycles of infection, reinfection, infection. So you go up and down the big curve. And I think that's one of the reasons why we're going to see this going on for quite some time. And I don't want to be alarmist. I'm just trying to be factual about it.
No, I think it resonates with me, because I'm saying, there's lots of confidence, which I think in some instances in this place like property market, we're sort of scrambling to get deals because interest rates are low and all that thing. But this is a global issue that, like you mentioned earlier, will likely take years before we can come through the other side and actually, start looking at what next.
Yeah, I agree with you. And the share markets, of course, have rocketed. And principally, most people don't realize, but principally, the reason why they've gone ballistic is that President Trump made an announcement a few months ago, and he said, we will have unlimited quantitative easing, which is just another word for saying we're going to print lots of money to fund our deficits. And of course, every smart investor in the world went, if he's printing a lot of money, that means interest rates are low. I'm not going to get any return on my deposit. I'm going to put it into the share market, and that's why they've gone ballistic.
So, what actions could we be taking for a more swift or more efficient recovery?
Well, we've made a few announcements. So the first thing is we need to support our businesses, and so we are trying to encourage those businesses that are doing well to take on new staff, because we've got this avalanche of people who unfortunately will be made redundant, and in many cases most reluctantly by the owners of the business, but that's a fact of life. So we've announced that we will pay a business $10,000 for every new employee they take on. They've got to have them for a certain period of time, and a maximum of 10 per employee. So because we want to encourage those that can take on a new person to take that risk. The second thing we've announced is that If you think about it, we've got a new category of people who have been disaffected by this shutdown or this recession. The first one is normally in this situation you have young people affected and they get binned out because of last in, first off and the cheapest. And the older people, anyone over 50 often gets lost at this point in time, which is a real shame. This recession, and I call it a recession because I'm pretty certain it will be, but this period is leading to a third class that we've never had before, and that is the highly skilled person, maybe in their 40s, such as airline pilots, who, of no fault of their own, but because their industry, and it's the same for the tourism, cafe, restaurateurs, all that sort of stuff, who no fault of their own, but as a result of COVID, and now find themselves unemployed. And what we are encouraging them, rather than sit at home, and they're highly skilled in most cases, so we've announced a scheme, the Business Start scheme, where we want them to, first of all, go and get a proper business plan checked off by an accountant. We're going to pay for that, but actually allow them to take up to 20,000 of their KiwiSaver account and to use that to fund the startup of their business. And we're also going to say for the first 10,000 of profit, they don't pay any tax. And we're going to also pay their company fees and all this sort of stuff. But the main thing is we want people who've got the right skills and are inclined, and of course it's voluntary, where possible to actually think about their future and to help them into a new business, provided that they've got an adequate business case to do that.
Thinking outside the box.
Now, just if I just carry on, we've announced 5 other things for small businesses, and I think one of the so we've announced some changes around a whole host of tax changes. We've announced some employment changes. We've announced some changes around getting cash flow, guaranteeing cash flow coming into businesses, particularly being paid by government agencies. But one of the things we've also announced is that if you look at smaller businesses, right now their access to cash and capital is quite important. So with regard to good New Zealand businesses, established businesses, what we want to do is encourage KiwiSaver providers, who at the moment control about 50 billion, to invest in great smaller New Zealand businesses. We don't want them putting them in the listed companies. They already have money allocated to that. We want them to encourage them to invest in a range of good privately owned New Zealand companies, effectively like a private equity. And we already have 3 doing it by example. We have Milford and Booster as a couple of examples. And so they've allocated a small part of their portfolio, about 5%, which is pretty normal internationally. And they are investing in New Zealand businesses. And we want them to invest in New Zealand businesses. And then for the startup businesses, what we like to do is we're going to change the rules, the tax rules. Because one of the things when you set up a new business, and I've done this, as you grow, you obviously take on new shareholding and new rounds of series of capital, series A, B, C typically. And as you do that, you dilute the existing shareholders. Under current tax laws, if you break the continuity of 49% of existing shareholders, you effectively lose all your tax losses. So if you've got a startup business and you're incurring tax losses, which is quite normal, you lose all that tax loss. So what we're going to do is change the test from a shareholding test to an activity test, which says if you're still developing an HR business with some app or something, and you're taking on new people, as long as you're still doing that type of business, you don't have to worry about your 49% shareholder continuity test.
And I also noticed the threshold for provisional tax was proposed to be increased by national.
Yeah. So what we've done is we've announced there's a whole series of tax stuff, but one of them we particularly announced is that with provisional, actually it's a whole second, but provisional tax, we've changed the timing for the mid payments. So most of that comes through and was required to be paid in January. We're saying now that has to be paid in late February, because it's the worst time. That's the time when everyone's away on holiday, got no cash, and that second provisional payment is a real pain. We've also increased the GST threshold from 60,000 to 75. It hasn't been adjusted since 2009. So that's a voluntary thing. So if you're starting up in a new business, you get to sales of 60,000. From there, you're compulsory required to do GST returns. We're saying we're going to push that threshold up to 75. And yeah, so there's other stuff to do with that as well.
Yeah. And I wanted to also ask you, what sort of opportunities do you think that there isn't going to be in this new environment?
Well, if we're talking from a New Zealand Inc. perspective, we've first of all got to concentrate on the areas where we have real skill base and capabilities, and we've got proven expertise. So obviously the biggest one of that is agriculture. So the dairy, horticulture, meat and wool sector, all those contribute hugely, and thankfully, because that has given us a huge continued export market, which has helped keep New Zealand in the black rather than the red. So that's one thing. There's obviously the whole stack of industries that are going to be decimated, or certainly will have to move back to just being domestically focused. And so our international export of, or international education market's gone. That's worth $5 billion. We want to encourage people back into New Zealand, provided they do all the right testing, but they'd have to come and live in New Zealand to do their course and stay in New Zealand. But because we've got a $5 billion hole in that. Tourism, you know, we're in a situation where people have to focus domestically. So where do we go apart from that? Well, I think we've just got to encourage particularly smaller businesses to have the right environment to actually continue to flourish. And then there's other sectors over time. You know, one of the things I asked to take on the manufacturing portfolio, there's never been a manufacturing spokesperson, neither in National nor do I think in any other party. And I said to Judith Collins when she asked me what I wanted to do, so I said I'd like to take on manufacturing. It accounts for just on 30 billion of activity. It employs about 250,000. And I think some of the areas, we've got some really smart manufacturing, and obviously dairy food manufacturing is huge, as you imagine. But we've got the snazzy end like Rocket Lab, the work they're doing around laminates, the composites market as well, which is really exciting. There are areas where we need to make sure that we're doing as much as we can. And I think also that probably comes back into making sure that when we're out buying goods and services, we're buying locally made goods and services, and that includes manufactured goods and services as much as possible, because rather than be importing, and every country in the world seems to be moving towards a protectionist sort of stance. New Zealand's incredibly open. I just think we need to be mindful, and we can do it at a personal level particularly, but also at a higher level, is make sure we're supporting our New Zealand businesses, manufacturers and things like that as much as possible.
Yeah, I definitely agree. And lastly, is there anything that you'd want to leave us with before we finish this up?
Hey, well, I'd just encourage everyone to, if you're owning a business, plan conservatively. Make sure you keep your good staff, because your business is your staff, and make sure you protect your clients and protect your cash flow, because that's the biggest thing that will always ruin a business, is when you run out of cash. So that means just be conservative. People like, organisations like central government and local authorities should be the ones taking the risk, because we should be the ones borrowing money. That's why as a government we've committed a lot to infrastructure, which is good to some extent, but also we need to be doing and commissioning a lot of building and construction, because those are the type of jobs, the type of industries that employ lots of people. And so the risks around the balance sheet, the liability risk, should sit with local government and central government. But at a business level, protect your cash, make sure you survive, act prudently and conservatively, make sure you come out the other end of this.
Absolutely, I absolutely agree. Hey Andrew, thank you so much for making the time to chat with me today. I really appreciate your benefiting from your expertise.
Hey, thanks, Gemma. It's been lovely to talk with you.
Come on.